Good morning, everybody, and happy weekend. It's March 3rd, Sunday, March 3rd of 2024. Eric Mashinsky, I'm your editor of the Phenom Crypto Letter. For those of you that are new, welcome. I have not put something out in full here besides our weekly updates, which is run by one of our research analysts that goes out every, I believe, Monday. So hopefully you're enjoying that. In the interim, I wanted to let you all know in a brief video update a couple of thoughts on the crypto market and just give you a heads up that I do have plans after fulfilling a thorough update to our Phenom Crypto Premium members tonight or tomorrow. I want to share a full update with those of you that are out there that are following some of our coin picks and give you more detailed feedback about where I think these markets are going. But I just wanted to give you a couple of thoughts this morning about where we are. You know, Bitcoin, I'm just going to pull up and share my screen really quickly. Let me do that. And let's just pull up coin market cap and keep it simple. But, you know, we're at 62,317. And, you know, looking back at the last month, we're up 44%, which is an extraordinary move, obviously. And I'll also just pull up GBTC, which has a longer history on the chart than any of the other ETFs. But, you know, you look at the RSI here, 83.86. You look at the, forgive me, but there's the Fear Greed Index, Coin Market Cap that does a good job at this. We're at the 86 level, which is extreme greed. But, you know, overbought markets can stay overbought longer than we think, and oversold can stay oversold longer than we think. And I'm definitely aware of that. I just wanted to actually, though, note a word of pumping the brakes this morning. You know, I've been a very loud and persistent voice over the course of the last 18 months about, you know, accumulating core positions during the bear cycle and the downdraft. And then really, you know, I became very bullish in the first week of 2023. You can actually see on some of our videos that are still up on. Unfortunately, we have two. I have the Gold Investment Letter, which is my main letter that's been around for 13 years, and so I need to separate the YouTube channels, and I think that that will help a lot. The Phenom Crypto Letter is going to have a new channel, and we'll have this stuff posted there. But I have published these on the Gold Investment Letter, which you'll see on the handle here. If you care to go back to, say, early January 2023, you can see in detail me talking about the fact that I thought we had seen the lows in crypto, and that was literally when Bitcoin was still in the 16,000s. And I'm just bringing this up because, not because, oh, you know, look at me, I was calling that number. I also, I don't get things perfectly, but with crypto, I have a pretty damn good feel. And I've been doing this a while. And so, you know, trading and investing and speculating, I look at them all, you know, they're a bit different, but still all, you know, the same goal, which is to make money. And that's what, you know, you guys are here for, is we're hopefully going to be together getting ahead in life from this new asset class, which is what it is. And we're seeing, for those of you that, whether you've been around or you're newer to crypto, you know that now some of this, what I would call validation, but really just adoption, that's come in through the ETFs. I mean, we have detailed numbers that I'll get into in the next video. I wanted to keep this one brief and just say hello and check in today. But, you know, the detailed numbers on the inflows, the net inflows, you know, GBTC has actually been the issue, I guess you would call it, with regard to the, you know, the supply of Bitcoin that's been coming out since the ETFs went public, because GBTC was transitioned from a unit trust, which just simply meant that you had to be an accredited investor and have a 6-month Reg 144 lockup as a U.S. entity and investor before you could liquidate any of your coins and tokens. So there are people that have been sort of locked in there, and now that they were freed up as it was converted to an ETF with free flows, we've seen a lot of the outflows come from GBTC. And also a big driver there is that their fee structure is much higher than if you're going to own a BTC from BlackRock or ARK or Invesco, et cetera, Bitwise. So that is what's been coming into the market. Now we've been absorbing all of that and then some, which is partially why this market, I think a big part of why this market has been so strong. We've now also seen signs, though, retail aping in, if you will, last week. There's a lot of things to remember, and I'm just going to give you a few thoughts so that you have something on a Sunday morning that hopefully you can chew on that's worth your time. I think, I've been through a number of these cycles now. Initially, just playing around, dipping my little toe in 2016, but that was, under $500 of Bitcoin. So I've been through these cycles, and I really started to pay a lot of attention after the 17, 8, early 18, late 17, $20,000 top. And after that, devising a plan myself based on some of the mistakes and also the excitement and the money that was made on the upside in the internet bubble going in from the late 90s into 2000. That was when I was a young new stockbroker in Chicago, and it was the first time I really was like making money in that bubble, and that felt good. And then it felt even worse when I lost it all back for everybody and for myself, and didn't understand cycles. But what I did understand from that lesson was extremely valuable in terms of how I was able to get ahead of the crypto cycles. Incredibly valuable for me. And having that experience, I hope, will help you guys as you navigate this, what is a wild space. And the volatility really is absolutely something that we should embrace and not be afraid of, but also be very aware of. Because if you're positioning yourself and you only get excited emotionally or start to really, pay attention to this stuff every time these green chunks are up here, and it's like, the RSI and the fear greed index is 85 to 95. And then if it, God forbid, when we see these violent pullbacks, like, we had a little taste of it only so far in the last 6 months, which was when we went in from January and had this sort of abrupt pullback. I think that was from high 40s to high 30s really quickly. That's peanuts in this market. I mean, that was like a walk in the park for what is going to happen for the swings. If you're looking to get wealthy and actually make very, very large percentage returns on your crypto investments, and I imagine that you are, you need to be able to handle these swings. There are going to be multiple. Let's just say, for example, and use a case of Bitcoin going to $250,000. I'm not even going to get into price targets because it's kind of stupid. We're going to have a better feel for where this is going as we go along the way, and I will adapt to that. But if I'm honest with myself, I was being really conservative back in when we were coming out of the bear market, and I've talked about 150,000 minimum target for this bull cycle. And I felt like I needed to do that, I think, because we just got the crap beaten out of us for 15, 18 months. And, things were demoralized. And a lot of people wouldn't even believe me if I said it was going to go up, a triple from 16,000, 17,000. But, if I'm honest with myself, I think that we're looking at, and I've done a lot of work recently. One thing I can assure you guys of that are here and listening to me right now, anything you read from me or hear from me in videos, I do a lot. I've absorbed a tremendous amount of information. And one of the things that has been critical for me, and this is really all I've done in my life to get to where I am, which is in a pretty good spot financially, coming from a not so good spot and being in not so good spots at different times, even in my adulthood, from making mistakes with investing and things like that. But essentially, or just having hard times. But essentially, where was I going with that? I've completely blanked out on that thought. Sorry, that's my bad. I had a complete text next to me, and I know it was somebody that needs my attention, so I derailed. I'll think of that in a second. But going through what we think is going to happen on the upside, what I was getting at was my price thought on where this is all going, and being prepared for they're not even bumps, they're terrifying dips on a roller coaster that looks like there might not be another up salvation or a slowing point when these things in this type of an asset class, this new type of an asset class pulls back on us. But if I'm looking into 2025, I think that there's a good chance that this market ends up overshooting what we're sort of, conservatively looking at because of the actual flows of institutional big money. And I've always said, so I'll just get that thought out of the way, 275 to 360,000 is sort of my base case range right now, frankly. That's something that's come up in my mind in the last week as far as where I think that this could ultimately go. But it is not going to be easy to nail that if you are, and that's why it's also extremely important to be navigating this stuff with regard to being a long-term investor. There are going to be times, I mean, when you're up, especially with some of these small coins, if you're up 30, 50, 100 times your money, it would be insane to not take some of that off the table and rotate it into safer, less volatile asset classes as you've risked up, you've been rewarded for that, and you end up having the risk revealed into a reward in an extraordinary fashion. You have to be able to manage that, and as well as when we're going through big downdrafts, you can't get shaken if you're too emotionally attached, and then you start getting the endorphin rushes like we have in the last week and even in the last few months. Keeping a lid on that, I think, is very, very important. So instead of even just trying to think about the two thoughts I was going to bring home that I just forgot, that's a second one that just went through my head prior to telling you my price target. What I'm going to do is I'm going to mention to those of you that are still looking to get further positioned, I would be a bit cautious in terms of doing too much at once when you're at 83% RSI, 84% RSI, 85% fear greed index into the 90s. I think we may very well go there, but I also look at things like, for example, just very quickly, I'm just going to draw a simple line here. So and that's actually something that you could probably put around right there. I mean, we could easily go higher. This might not even be an actual box line. This is only on the daily chart as well. I like to look longer term, but in any event, I'm just mentioning that for those of you that are still looking for positioning on the buy side to get long, don't get overexcited when stuff starts getting away from you. They call it FOMO, fear of missing out, and you can make bad decisions. There will be, and this is the point, and I'm going to stop today, there will be 30 to 35% violent pullbacks on the way. If we're going to go from 62,000, let's call it 180, 190,000. If that's possible, and you think that that's happening, a triple. And if you look at clearly historically with these 4-year cycles, with the halving and the fact that, there's stock to flow models and things that I was just going through with Plan B, who's very good on YouTube, about the eventual targets of where this stuff is going to go. And it's an art, it's a science a bit, but it's an art, and it's not completely exact. But that stock to flow model is very helpful from a long-term perspective, which even targets, I think, higher prices than I just mentioned in terms of my range. But it's not going to be exact, and you are going to have to be a bit flexible with how you're going to manage your money during this phase. But what I'm saying is that envision yourself in the amount of money that you've put to risk. Are you able to handle, if, like, that's just say right now, let's just say Bitcoin tries to make another run here this week. This is what I think may happen as we go up into the mid to high 60s to test the all-time highs from 2021. Maybe even pop through there briefly. But then we're going to, I hope what ends up happening is we take a month or two of more sideways condensing action. But that would start with perhaps a pretty steep pullback. And if you're talking about 30% uh, from 70,000, could you handle buying in the 60s or 65, 68, 70, or whatever, for those of you that are looking to buy? Can you handle it if you get a flush fast to 48, $49,000? Or are you going to get scared shitless and sell your stuff and just get shook out? The trees get shook around hard in this space. Don't be the person that emotionally reacts to these moves. Be the person and the investor that is positioned and ready for these moves, and make sure that you're appropriately positioned in terms of the size of what you can risk in a market like this. One of the points I was going to make is that retail coming in recently, I had a reminder last week when, on Coinbase, for example, and I'm not going to get into self-custody and, cold storage and not your keys, not your coins today. I'm just talking about, for a lot of us, a lot of you, a lot of me, myself as well. I still use Coinbase and centralized exchanges, and I have a very substantial account of a lot of the larger caps that I own in Coinbase. And I went on there the day that we went and pumped to 64,000, and my account balance was zero. And so, you're just like, what the heck? And I've been through this before. So luckily, within a moment, I was like, wait a second, Bitcoin is going wild. Coinbase must have just crashed. That was the second thought that I had after, like, what? And I know a lot of people were just scared to death. I did a Twitter search that I found right away. Okay, people are seeing this everywhere. It's a glitch. They'll fix it. The money's not sitting there. This is the front end of their accounts. And I believe Coinbase does a responsible job of not, leveraging things out. What customers own, they own, and the vast bulk of that is offline. So I ended up, just cooling out, but it was a good reminder. And then yesterday, and I will stop after this, I promise. Yesterday, here in Miami, I live in an area off of it's like on an island between Miami Beach and the mainland. And there was a cop that was shot on the causeway, and they shut down all incoming, outgoing traffic. So I'm stuck in this area and nobody can get to me, most of the day yesterday. And then the internet, actually, the Wi-Fi was down. It crashed in my neighborhood for the same time. It was like 4 or 5, 6 hours. And I'm only saying that because I'm like, listen, I'm so bullish on crypto. I mean, you guys know this, but let's not take this for granted. And let's realize that there are a lot of risks. If you want to be in something like this, just be prepared to understand that you're going to be it's not going to be a smooth ride. And there's a lot of shit that can go wrong, at least temporarily. And you're probably going to take a bullet or two, to get up the mountain and hopefully be able to set up shop at a higher spot on the mountaintop for the rest of your existence in the flesh. But you know what? It was just a good reminder for me that the power gets shut off, the Wi-Fi. What's going to happen when everybody adopts this stuff and that happens? We still have to watch out. And that's also why I will tell you, I am one of the people that is a massive proponent of owning physical gold and Bitcoin. And it is just stupid to putting the two against each other, when the issue here is we have fiat debasement of currencies, and they are happening at an accelerated pace, what you would call a collapse in many nations around the world, on a debt-based levered system, going into what will be a debt spiral for every fiat currency around the world. The best we can hope for people, for mankind, is it's a controlled implosion. We don't want to have this all come down like Babylon in, one swoop. It would be brutal for all of us because of the suffering going on in the world. So please, let's be a little understanding. today for a lot of people that just quite haven't seen this yet, like we are here, and those of you that are exploring and learning, I only make one guarantee, and then I'm going to wish you a good Sunday. My only guarantee in these markets and in this investing world is that if you put time and energy investing into understanding more about money, the monetary system, particularly Bitcoin, and this new world, this new system, this new decentralized monetary system that is rising up on the side of a collapsing fiat currency system. If any time you put in and invest into learning about it, understanding it better, you won't regret that, because this is stuff that is not going away. And the doorbell just rang. Maybe you heard that, so I'm going to call it a day. Have an awesome one. Cheers.